The Reserve Bank of India last week kept its policy rate unchanged, citing high inflation outlook. However, some banks have already responded with a reduction in lending rates. Now, how is this possible that without a policy rate cut, the RBI was able to bring down effective lending rate for customers? The Monetary Policy Committee that votes on the rate cut decision every 2 months is bound by an inflation targeting framework. In December, India's retail inflation breached the upper limit of MPC's inflation target of 6% and is expected to remain high through the first half of next financial year. That's the reason why it could not go for a rate cut in the February policy review. Instead, the RBI found a way around the rate cut to ease the liquidity in the banking system and direct it to specific loan segments. First step was to allow banks to exempt retail loans for home, auto and MSMEs while calculating the cash reserve ratio requirement. CRR is the mandatory cash that banks have to set aside with the RBI on a fortnightly basis. With this move, the central bank has ensured that the cost of funds for banks will come down, which will encourage them to pass on the benefit to customers. While the RBI is yet to share the detailed circular, from the information that we have, this exemption is only applicable to incremental loans between January 31st and July 31st, 2020. RBI also made changes to its liquidity management framework. It has introduced long-term repo auctions for 1 year and 3-year tenures. RBI said that it will inject Rs 1 lakh crore of liquidity in the system via LTROs. With this move, RBI has ensured that banks who need funds to lend will be able to access short-term liquidity at existing policy rate. Easy availability of funds will also enable banks to lower the rate for customers. In its February policy review, RBI noted that banks had passed on only 69 basis points of rate cuts in response to its 135 basis points reduction over the last year. This is only for fresh loans, while existing loans only saw a reduction of 13 basis points. Now, RBI expects faster transmission of policy rates and an improved credit flow to retail loan segments that will help revive credit demand going ahead.